Good morning, traders. Today is Thursday, January 19th. My name is Charles, and this is the Pirate Traders live stream. All right, well, sorry, I'm running a bit late, so I'll try and do this very, very quickly. The first and foremost thing that we're looking at today is the failure to break out of the larger downtrend that we got yesterday. So if you look, the last few times we've tested this downtrend, first time we barely just poked at it and then failed. Second time we were able to break through twice, but we couldn't close above it, so we failed. And then this time we were able to break through. We were even able to close above there one time, but then we failed once again. So we're looking for a very similar pattern here as the last few times this has happened. We're looking for the market to pull back and consolidate, right? It did it there, pull back, consolidate. It did it there, pull back, massive consolidation. So we're looking for the exact same effect once again, a pullback and consolidation. So now let's take a look. We're on the daily. Where are we right now? Where are we opening? Well, right smack dab in the middle of those two different balance areas. Balance area 1, balance area 2, right? So we are right smack dab in the middle of the two. This is the larger balance that's happening. Testing the downtrend. This is the shorter term balance that's happening. So we are just looking at more balance inside of balance inside of balance. Why is that important? Well, in a situation like this, the market will often get itself overly long or overly short, and then it has to go back to balance that off. That is what I see as being at play here this morning. Now, the momentum is to the downside. We had a lower high and a lower low yesterday. We had value lower. So the lower high is a sign that the market is done going up. The lower low and the value lower are a sign we may be beginning a trend to the downside. We then closed the day with a spike down, which was bearish, increasing the odds momentum to the downside. But with this large gap that we're opening with today, even though we have all this momentum, I think the first order of business for the market will be to try to fill that gap and get back up to yesterday's low at 39.44. Once it gets there, there's plenty of sellers waiting to reject and try to take the market lower. And of course, anywhere in a gap, they could reverse it and start to take it lower, and it's a gap and go. But I do think the first order of business is going to be to try to fill the gap because of the balance inside the balance inside the balance. Odds are they got themselves a little bit overly short in the overnight here, and they're going to need to rebalance that a little bit. So we are looking for support and continuation to try to test resistance at 39.44 at the gap fill. It's a gap inside a gap. All right, Charles, I get it. You're looking for a gap fill. You think they're going to try to do it. Fair enough. What if they don't? What's going to be the signal to you that this market's going to go lower? Well, the first signal at this point is the half back will fail to act as support. So from here on out, in an attempt to fill the gap, this node right here around 39.25 should hold as support as long as they're still trying to fill that gap. I don't know how choppy it'll be. We may go in a straight line. We may very slowly melt up. But as long as they are trying to fill the gap, they should hold that halfback, okay? So the first signal is the halfback breaks. If the halfback breaks, it doesn't hold as support. The next signal is passing through the opening price. Passing back through the opening price, which is at around 39.22, would increase the odds that it is a gap and go, that they're trying to take the market lower. So that would be another signal of bearishness. And then the final sort of nail in the coffin would be getting below the overnight low at 39.05 and then finding new sellers down there. That would tell us the spike down was momentum, the gap and go was momentum, the new sellers is momentum, and that we should look for a continuation lower. That's the absolute certainty. But I would feel much better about it if we could fill the gap first and then come down there. So let's see what happens. Another way to kind of describe what I'm trying to explain here is there's a difference between a trend down, which is where the market is convincing more and more people to sell. Every time it bounces, it's convincing more and more people to sell. And a market just kind of liquidating, a market just kind of crashing because there just are no buyers willing to buy. And so it keeps going. This to me feels more like that liquidation type of thing. This is not necessarily panic. This is not necessarily new selling. It's just panicking out of these longs. And in an environment like this, you might try to fill that gap. Well, man, I love when the moment I say something, it happens. All right, so breaking through half back, little bit bearish to see. Now we're watching that opening price. Got 162 people hanging out, only 41 likes. Please smash that like button. Little thumbs up for the gap and go. Looking for a gap and go. Can they do it? Okay, so they held support above the opening price there. So it's not quite a gap and go yet. They could be still trying to fill that gap. Okay, so what we got going on right now is, the question is this really support happening right here? Or is this a combination of traders looking for the gap fill, very short-term traders looking to fill that gap, and sellers from the overnight who just are giving up and they're taking profits? They're thinking, oh, I'm not going to get it. So they're taking profits here. Well, that story is being told in the ticks. But once they get back to the zero line, if they get back to that zero line and they have not been able to fill the gap, odds are it'll become a gap and go. But right now, as long as they hold this, they're trying to fill that gap. However, I do believe it's mostly short-term traders just looking to get to yesterday's low. Gap fill back in play. All right, so we got the ticks back to the zero line, but we only got about half the gap filled. Okay? So there's buyers stepping in, but they aren't even getting what they wanted. Are they going to keep stepping in? Are there going to keep being more buyers continuing to try to push this market back up to yesterday's low? Or are those ticks about to get smacked down? Got a weak high. Mark says, so above the zero tick, would you say there are some initiative buyers? Under the zero, reactive? No, I mean, there's both on both sides, right? But my point is, when you're watching the market go up and the ticks go up, okay, in general, just the market's going up and the ticks are going up, you don't really know if it's momentum, if they're going to keep going up until it gets to the zero line and then it keeps going, right? Because on the way up to the zero line, what you can have is people who were short, people who sold before that are just taking profits. So they're making the market go up because they're going long to get out of their short. But they're not really momentum to the upside because as soon as they take their profits, they're gone. And that's what happens. Literally, we're watching it right now. This is what would happen. So all of those, gap and go. We're back again, back through the open. So that's the example of what exactly I was describing. So as soon as they got back to the zero line, what happened? Boom, crashed and burned back down, back through the halfback, and now we're going to test that opening price again. So That's what happens when it's not really bullish. They're not really trying to take the market higher. It's just shorts covering and, FOMO buyers, short-term traders that are trying to get that gap fill. So, okay, great. They bought support here at the opening price the last time around. Are they going to do it again? They only got halfway. Well, looks like they're not. So that is bearish to see as a gap and go. So ironically, on the way up, this is bearish. New sellers at the low. So I remain bearish at this point as long as we remain below yesterday's low. So they could even head up now and fill that gap, and I would still be bearish, assuming that there'll be a lot of sellers waiting here just because of the way that just played out. The way it was nothing but overnight shorts taking profits. This looks bearish to me. So now the next thing we got to do is work our way through this last bit of support from the overnight. So we'll be looking for buyers between like 39.11 and 39.17. And then if that breaks, test that overnight low and see, do we get new sellers down there? New sellers at that overnight low would be bearish for continuation to the downside. And we're immediately going to switch gears and do what we were doing on the way up. If you recall, on the way up, we kept talking about all this weakness we had left behind. There was weak reference after week after week after week after week, the whole way up. And we just kept saying, who cares? Don't worry about the weakness below. We'll focus on the trend. As long as the momentum on the daily is saying up, we'll assume the market's going to keep going up. But when that trend breaks, then we'll worry about the weakness below. Well, yesterday that trend broke. We got below the previous day's low, and bam, they came down to repair all that weakness. So now we're doing the same game in reverse. Okay? Built this momentum yesterday to the downside on a weak high. Left behind single prints, single prints, single prints. Now we're leaving behind a gap and another weak high once again. So if we push below the overnight low and we find new sellers down there, just like we did on the upside, we will focus on the daily momentum, but keep in mind all the weakness we're leaving behind. That is setting us up for more of this right here. So on the short term, on the daily, in the moment, right now, intraday, I think we're going down. But I think we're still just playing this game. Bigger picture. And so they'll get themselves overly short, and then they'll go get themselves overly long, and they'll just keep playing this game. Balance, inside balance, inside balance. Okay, so we're starting to test this support down here. There were buyers in the overnight trying to defend these levels. Will they try again now? You got basically where we just found support, 39.15, and then like 39.11. If 11 breaks, you're looking to test the overnight low. And things get bearish, oh so bearish, as new sellers will join in the trend. Ticks, slap down again. So second time in a row, the buyers did all the work to get back to that zero line, and they got nothing for it in terms of price. Are they going to keep doing this dance? Are they going to keep buying if they get nothing for it? Let's find out. Screwball says, I think I'm not going to join the move down now. On the daily, it looks like a choppy area. I mean, that's what I just mentioned. Balance inside a bounce inside a bounce. But I would encourage you to give the market a chance if it can get below that overnight low and find new sellers there, because that is a strong sign of a trend. Spike down yesterday, gap and go today, new sellers below the overnight low. That's momentum. Can they do it? Scooball says, but if you were a swing trader, would you look to buy the test of the previous balance area? That's a fair question. Let's take a look. Nope. The swing trader move would have been to sell the break of yesterday's low. So you'd be short right now, monitoring for continuation to test this trend line here. You would not be trying to buy this, in my humble opinion. It may well be. It may well be that we just turned around, right in this exact same spot, and then start going up. And we do this dance again, balance. Like that. Certainly is possible. But if I was a swing trader, nah. I would have been looking at the breakout trade. That would have failed, and I would have taken the short when we broke back through this trend line. And then I'd be looking at the spike down at the end of the day yesterday and saying to myself, great, spike down. No reason to take profits yet. I'd be looking at that gap down this morning. I'd be saying, great, gap down. No reason to take profits yet. I'd be looking at that pass back through the opening price like, it's a gap and go. Great, no reason to take profits yet. I'd be waiting for a sign the momentum is over. Scooball says, I'm learning to trust myself about not getting into a trade, and it's working. Oh, that's the best thing. That is when you really level up as a trader. It's like first you learn one trade, one setup, one system, one way to approach the market. And then you discover a second one, and you make the first one a little better. And then you add a third, and you make the second one a little better. And then you add a fourth, and you're building and building and building. And then you get to a level in your skill development where it's not about building anymore. It's actually about honing things down. All right, so they broke through the first resistance, and they're back to the zero line. So the question is, do they get slapped down once again? So then it's like you start actually having less things that you look at. You hone the skill set, and you become more and more, more and more with a scalpel, more precision. All right, well, ticks are breaking through the zero line. Dun dun, dun dun, dun 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 dun. Slap down at resistance. Yeah, so that's like when you start talking about honing your skills, you start to recognize on a day like yesterday, are you trying to grab, one little trade here and there, little bites, lower, little bites, little bites, little bit of profits, little bit of profits? Or are you just getting short on the break of the previous day's low and then waiting for cessation and then looking for another one on the breakout to the downside? By simplifying your system, it gets easier. Less is more. Nathan says long above 30. Well, let's talk about it, Nathan. What kind of a trader are you? How do you approach the markets? So what you're basically saying is, Charles, your premise is a gap and go. Your premise is they couldn't fill that gap. And so that means they're trying to take the market lower. If they're trying to take the market lower, the first target is to get below that overnight low. So you're looking for the market to go down. But if it doesn't do that, if it finds support in here and it's able to come back through all this resistance that just held, passing back through 30, shouldn't you be in the trade at that moment for the gap fill? Whoops. Shouldn't you be in the trade from 30 to get back up and fill that gap? As what should have happened doesn't, and now you want to be in the reversal trade. And the answer is, yes, sir. That's a trade that makes sense to me. Getting in a trade to try to fill the gap makes sense until you pull back through the opening price. Then a trade to try to get a gap and go makes sense until you pull back through the resistance. And then a trade to fill the gap makes sense, and so on and so forth. But what can happen is you can get chopped up in the process. If you try to go long and then you get stopped out, and you try to go short and then you get stopped out, it can be very, very difficult. So the question isn't, do I go long from here to here? The question is, how are you trading it? What is your system for entering a gap fill trade or a gap and go trade? Are you short right now? So does that mean you have to first, you're in a short, you have to lose some money in the short. So now you're at a loss when you get stopped out, and then you get into the long, and now you're taking on all this risk in the long. What if it pulls back down again? Then you lose. So you have to have a system for approaching a trade. It's not as simple as, do I go long at 30? I know what you guys are thinking. Charles, this feels an awful lot like chop. Isn't this the same as yesterday where it just went up and down? No, sir. This is a completely different market doing a completely different thing. This is momentum. What this is right here is the buyers are trying to save the market. They keep buying and we're gonna go fill that gap. And they keep buying and they keep buying and they keep buying, but there's just not enough of them. They just keep running out. So this is not a two-sided market where they're playing tug of war. This is a one-sided market where there just are no buyers to push it up. And so it just keeps falling right back down. The question becomes, if we don't have the buyers here, where do we have to go to find the buyers? Next support. Scooball says, is there more days like yesterday or days like 2 or 3 or 4 days ago when you can grab one move only? I suppose it's not about which there's more of. It's about having a strategy for both, right? It's about being able to get into all the long trades on the way up here that were very, very hard to do. Because on the whole way up, it felt like the market needed to pull back down. But if you had a system, as I do and as I talk about all the time, you understood what was happening. You understood that there was momentum. You understood that the highest probability was that it was going to keep going up. You understood and you understood and you understood. And so how you trade those individual days, which were kind of like rotational days, they were weird. It's hard to explain. It was like trend, break, trend, end up being a trend day, but in a rotational way. You know how to trade those days on those days when that's what's happening because your system gives you that information. And then when you have a day like yesterday where you're like, oh shit, we just broke the previous day's low and we broke this trend line. Oh my God. Then you have a system to trade for those big crazy days. That's kind of what I'm trying to talk about. David V, are you treating the wicks on the tick chart as rejection? Yes. And it really doesn't matter. Like the wicks are just because I have 15-minute candles. If you had 1-minute candles, you would see the candles go up and get rejected. You know, it would be like candlestick, 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 candlestick. It's about the amount of time they spend above the zero line. It's the fact that in the first 15 minutes, they could barely spend any time above there and they came back down. Second 15 minutes, barely spent any time above there, came back down. Speaking of which, now that we're staying above the zero line and we're back through the halfback, I am back to neutral. However, I am not bullish. I want to be crystal clear about this. This is not bullish. If they can keep the ticks above the zero line now, it will mean those short-term traders who all day long have been buying and buying and buying, trying to get the gap fill, will get their chance. If they can bring in enough new buyers to keep that tick up there, they'll get their chance to try once again to fill the gap. But I am almost certain that there is a lot of sellers waiting up here. And so once all these short-term traders that look how hard they're having to work right now to try to fill that gap, if they get up there and they fill that gap and then they get rejected, they won't buy again and the market will head lower. So I would describe myself as neutral right now because they might try to fill the gap. I would not consider that a trade I'd want to jump into. And I would not become bullish until we got into yesterday's range. As I'm thinking those ticks could get slapped down again. Gap fill, try number 3. Ding, ding, ding. Can they do it? Probably not. Especially since risk are now more balanced. I would agree with that. Okay, so there was strike three, third time in a row. The buyers have stepped in to try to fill the gap. And by the time they got to a point where there were finally more of them than there were sellers, what happened? They ran out. There was less buyers. Are they going to do it again? We can do this all day, gap fill buyers. We can do this all day. Okay, normally I'd be back to bearish now that we passed back through the open and the ticks were slapped down again. But I'm going to give the buyers one more chance here at this support at 39.20. If that breaks, then I'll be bearish again. Okay, well, there you go. It's fucking market. Okay, so now we're doing this dance again, the support dance. Can they hold 39.11? If not, looking to test that overnight low. Mark, sweep the leg. Now paint the fence. Now sand the floor. Malang says, what does sensation mean? Well, sensation is when you feel something deep down. No, what I'm saying is cessation, which basically means bringing to an end. And what I'm talking about is the trend. So when the daily was making higher highs and higher lows every day, it was trending. So, higher lows, higher lows, higher lows, higher lows. We were trending. And so yesterday when we made a new low, when we got below the previous day's low, that was the end of the trend. The trend ceased to exist. So that's cessation. I don't know. Jim Dalton invented these words. Don't ask me. Okay. Why is it called a time price opportunity? I don't know. John says one giant liquidation break and we're off to the races to the bottom. Um, some small liquidation breaks. What really matters is the new sellers below the overnight low. That's what we're looking to see. So obviously we got buyers right now, right? They're defending and defending and defending all morning. They've been buying and buying and buying, and they just bought again. Well, where are they putting their stops, these buyers? You know, where are they going to admit they're wrong? Well, their stops are down here below yesterday's low. So if we poke down here and all we do is fill their stops and then we start coming back up, well, that's fine. That's a liquidation that will just bring in buyers. No big deal. But if we come down here, we liquidate, we fill those stops, and then new sellers start to pile on at yesterday's low, that's when. Dun, 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 dun. Evolved monkey, man, we've got all sorts of monkeys up in here. We got trade monkeys, we got evolved monkeys, we got monkeys galore. Monkey. Do I find new sellers via the delta? No, it's price action plus ticks. Okay, so it's very simplistically, is the market going up or down, price wise? And in that time, what did the ticks do? Did the ticks go up and down? And so if the market's going up and the ticks are going up, we assume there's new buyers stepping in. But we just don't care about the new buyers as long as they're below that zero line. There's just not enough of them to matter. It's only when they get above the zero line and can stay above it. Okay, great time to bring it up. We're above it again. Round number 4. Okay, can they do it this time? Or are they going to get smacked down like they did the other times? That's the question. We just have to keep watching and keep waiting and let them keep trying. And it'll break one way or another sooner or later. That's just how it works. But the long and the short of it is, as long as it's going up, there's new buyers. They just don't matter unless they're new buyers above that zero line. And same thing in the opposite direction for going down. So like right now, the market just made this big old move, just jumped 10 points to the upside from, the A period low. And in that time, look at how far they pushed those ticks. Well, if now they get smacked down once again, are those buyers going to do it again? I don't know. Eventually, they got to give up. Eventually, they got to say, enough is enough. We're not going to fill the gap. And when they say that, suddenly their stops become food for the market. Once those buyers finally give up, they must become sellers. Oh, what's that, Charles? The ticks got smacked down again? Oh, my goodness. And BBQ, the smackening. This January on the ES only, will the ticks get smacked down again? Please, I'm a buyer. Hold the ticks. Psh. Well, it is worth mentioning as we are right back at the opening price and we are almost an hour into the day. We've got ourselves a week high, a week low, good taper on both sides, and a bell-shaped curve inside a gap down. Oh, man, what a market we've got here. If we wanted to simplify things for ourselves, if we wanted to say, I don't want to play with this chop anymore, I don't want to play with all this uncertainty, I just want a simpler approach to the market, in 8 minutes, we're going to print the C period. If we print that C period, whichever direction it breaks this initial balance now, the market is likely to get continuation in that end. Okay? Obviously, you guys know how I feel. I think the bears are going to win here. And the reason I think that is because I think the bulls are just looking for a gap fill, but they can't get it. And they will run out. There's only so many people out there willing to go long to try to fill a gap. And when the last guy does, the market comes crashing lower. So if I had to guess right now, gun to my head, I would say we're probably going to break the low. Okay? Looking to test those overnight lows. But if you didn't want to take the risk now and you wanted to wait, you could wait to see the C period break the B period low. If you wait for that, though, don't wait around too long looking for a trade, right? If you wait for the initial balance to break, we get below that overnight low, you see that resistance, don't go waiting for another big pullback to try to get short. That resistance may be your only opportunity before the market continues much lower throughout the day. Okay? And I would say if we break the high, so let's say we print that C period, and the market is able to get those ticks back above the zero line. It's able to keep those ticks above the zero line. It's able to get through the resistance. And then the C period breaks the A period high. Well, then it's a very good setup to try to fill the gap at that point. I would not be willing to take that trade in the B period, but I would in the C because the probabilities change at the end of the first hour. So an initial balance break is different than just a B period trying to go fill a gap. An initial balance break is a new set of buyers trying to do a new thing. So if you wanted to keep it real simple, wait 6 minutes and then see which side breaks first. And go with whichever direction the initial balance breaks. Great MES. What are you doing to the chat, bro? Carol Baskin's ex-husband, Don, has been found alive in Costa Rica? It cannot be. The murdered husband? Cue the 8-part docuseries. All right, Mark's with me. He thinks we're going to break lower. He's looking at them ticks. Starting to smell like a liquidation. You guys feel that tempo picking up? Buyers are getting nervous. All right, and there you have it. The printing of the C period. So this is pretty much the moment of truth for the market. If they can break the B period low or the A period high, they're likely to get continuation in that direction. And the basic concept is that because of this bell-shaped curve, because there's the same number of people going long and short, whichever side breaks, the other side is likely to get squeezed. And you'll get some, a pop in that direction. And then, like I said, if we break through this support in the overnight around 39.12, I would be looking to test that overnight low. And there is always a chance you could bring in new sellers there. Bringing in new sellers at the overnight low would look for monitoring continuation to the downside. So you'd push below the overnight low. You're getting resistance. You're getting new sellers. They can't get those ticks up. You look for the market to head down and repair the next week reference at 96. Is that all the market needs to turn around? If not, look to repair the next week reference and again and again. Okay? As far as breaking to the upside, if the market is able to get up there and get above the A period high, they most certainly should be able to fill the gap and get to yesterday's low. And then you do the same thing from there. Do you get resistance? If not, test the next. If not, so on and so forth. Okay? That to me seems like the least likely scenario. And the more likely scenario is either we start to trend, we push below the overnight low, fail to go lower, and then we just go sideways the rest of the day, or we trend lower the rest of the day. I think a gap fill is now unlikely. But I've been wrong before. With that, I will say goodbye, farewell. I will wish you all the best of luck on this Thursday. And I will head on over to hang out with the cool kids in the private stream. Brigade members, let's set sail.